You generate enough income passively so that you can retire without adjusting your lifestyle. Hi there, my name is Lee Arnold. I'm the CEO of Secured Investment Corp, and we work with clients all over the country in helping them achieve what we call our freedom number, or said differently, the FU number. This is the forget you number, where you can tell friends and family, forget you, this is working, I'm getting the rate of return that I need. Now the goal here is to help you generate enough income passively so that you can retire without adjusting your lifestyle. Now, unfortunately, a lot of people, they're making $50, $60, $80, $100,000 at their job, but then when they go to retire, when they take in their Social Security benefits and whatever income they're earning from their retirement accounts, it's still less than what they were used to living on. So I'm going to give you a quick 5-minute breakdown of what you need to be doing, how you calculate the number that you need so that when you do retire, nothing about your life has to change unless you want it to. But it won't be because you're making less money, it's because you've chosen to live somewhere different than where you currently are. So to begin, we need to figure out what is your number. To calculate your freedom money number, first thing is you must know how much cash you need to produce the income and at what rate of yield or rate of return that you need to earn to replace your annual income. Now I know that's a lot of words, that's why I'm going to break it down for you in this example, okay? So you want to retire and you want to replace your annual income from job with passive income, mailbox money that just comes in automatically every month because you've invested it into the right places. Now, this money must come from a source that requires no effort from you, a straight return on investment, and you need to recreate the $90,000 annually. How much do you need to invest at 9% to recreate $90,000 in annual income? So you make 90 grand a year right now at your job, and that number is going to fluctuate as you're looking at this. It's different for everybody. But if you think that you could conceivably get a 9% annualized rate of return with consistency and frequency, how much do you need to start with so that that 9% makes 90 grand annually? Okay, so here is the formula that you need to calculate the investment amount. So right now where you are, wherever you're sitting, I want you to take your current annual income, okay, and then divide that by the yield that you believe based on your current knowledge of what you could earn in investments. Now, we know that the majority of people, their greatest investment is number one in their primary residence and number two in their company-sponsored 401k. That's typically where people are getting it. Now, in your company-sponsored 401k, you've had highs, you've had lows, but stretch it out over any decade in the stock market and you're averaging a 7% annualized rate of return. But remember, we need this income to give us distribution so that we can use it for living expenses and housing and heat bills and all of those things. So it can't all be stock market because, as you know, the stock market is volatile. Last year it was down 20%, next year it's up 12%. You just never know. So we need this number to be something that is predictable, reliable, repeatable. And if stock market is where you're going to play, you are safe running your number at 4%. So take your current annual income, divide it by 0.04, and that'll tell you exactly how much you need to retire with in cash in investments to produce that $90,000 a year income. Now let's look at this, okay? Let's say that you make $90,000 a year and you could conceivably produce a consistent 9% yield on your investment portfolio across the board. Stocks, bonds, mutual funds, real estate, private equity, syndications, whatever you got, but you can produce 9% annualized rate of return. Well, to generate $90,000 a year, you need to begin with $1 million. So as you think about retirement, the question I have for you is, do you have $1 million in cash, liquid, home equity, equity in other properties, your 401k? Could we transfer that post-retirement into a self-directed where we could be putting into some of these alternative investment opportunities where we can get 9 consistently? If so, all you need is $1 million. Now, if you can only generate a 4% rate of return, then you're going to need to retire with more cash. If you can produce a higher rate of return, you're going to need to retire with less cash. Okay? So you will need $1 million with a rate of return at 9% to recreate $90,000 in annual income. Now let's look at another example. what rate of return will you need to have, an annual income of $120,000 if you have $1 million in retirement? So you're going to retire and invest $1 million. So here's the formula for example number 2. Please write this down. We're going to take your current annual income divided by the investment amount, and this is going to equal the rate of return that will produce. Now let me break this down, okay? If we start with $1 million in retirement and we can effectively produce a 12% rate of return, that $1 million will make us 120 grand. Now, you might be in a situation right now where you're living on 60 or 70,000. So $120,000 annually would be really good. But to achieve a 12% return, you guys, I can tell you, you're going to have to take greater control over the direction of your investments and where they are going. So if up to this point you've just been allowing your hedge fund manager, your registered investment advisor, or whoever administers your company 401k to kind of do with your money as they choose, that's not going to be the right strategy as you go into retirement, but it can't be the only strategy as you go into retirement. So again, we go back to balanced portfolio. That's what we're looking for. Now, what I want to do here is let's calculate your freedom number. What do you actually need to retire with? So to do this, we're going to take the amount of annual salary that you need to replace, and then we need to determine the rate of return that your investments need to yield so that you can retire comfortably. So let's look here. Okay, so right here, take your current annual income. So let's say that right now you are making $55,000 per year. And I will ratchet these up just so we have examples for all of you. Okay, $50,000 per year. Okay, and you believe that you could effectively get a, let's call it a 7% rate of return on an annual basis. We're going to take that $55,000 divided by the 0.70. And what that tells us is you will need to retire with $785,714. Now again, this can't be home equity, right? It has to be something that we can deploy into investments where it's producing a rate of return. Now some of you are looking at this and going, well, Lee, good grief, you know, I'm already in my mid to late 50s or 60s. There's no way I can generate $785,000. I mean, all I've got is $300,000. Okay, so now we reverse engineer this, okay? What yield do we need to produce if all we have is $300,000? What yield do we need to produce to get a $55,000 annual return? So here we're just going to take our $55,000 divided by 300,000, and we need to produce an 18.3% annualized rate of return. Now, that's pretty high, especially if you are investing your money through conventional means, Wall Street, stock market, 401k. I can tell you, however, that this number is very easily achieved through real estate investment strategies like wholesaling, purchasing property subject to. There's a lot of ways that you can produce this rate of return. So it's not all doom and gloom. It's simply understanding the math. This is what I've got, this is what I need, and this is what I need it to produce so that I can continue to live comfortably. Now, some of you watching, you're doing much better, okay? And much better is great, but it's kind of the Achilles heel as well, because when you're making $250,000 per year currently at your job, it means that you're going to have to generate a lot more income and produce more return to get the same passive income on an annual basis. So for you, you've got $250,000 and you believe you can effectively produce a 7% annualized yield. So same thing for you. You're going to take $250,000 divided by 0.07. You need to retire with 3.5 million. And I'll give you the exact number, $428,057. Here's what you have to retire with in cash or access to liquidity producing this number to generate that. Now, you want to make this even simpler? Watch this. What if we could take this 14, what if we could take a 14% annualized rate of return, how much cash would we need then? Again, same formula, take the $250,000 and divide it by 0.14, and you can do it with half the money. 1.785-714-29. Now, why am I telling you this? Why is this so important? I've been working with real estate investors and managing people's equity and those types of things for almost 30 years now. And the question I always ask that nobody can answer for me quickly is, what yield do you need on your investment portfolio to produce the desired outcome? And most people go, I don't know what you're talking about, because amateurs invest for profit, professionals invest for yield. So if you don't know what your yield number is, then you're never going to be able to figure out what your freedom number is. Your freedom number is the amount of cash that you retire with invested at this yield rate to produce this much annual income. Now, I would like to help you figure this out. So here's your next step, okay? Click the link below. I want you to schedule an appointment. You're going to talk with one of my business development consultants. They're going to walk you through this. Now, these are private consults just between you and them. All of this is classified information between you and them. And this is the conversation you're going to have. How much are you earning annually? How close are you to retirement? How much runway do we have to work with before we're living 100% on this freedom number and its yield? Okay. Step number 2, they're going to work with you to figure out ways to build wealth. So if you find yourself in this situation where you've only got 300 grand and you need to add another $485,000 in the next 4 years, it can be done, but not doing what you've been doing up to this point. So they're going to talk to you about different strategies and things you could be doing right now to be building wealth. And then step number 3, you're going to achieve the income that you need, this freedom number, so that you can retire yielding this in passive income, so that you're generating the income you need to live on an annual basis, and you don't find yourself trapped like so many of our retirees presently, where they didn't do this calculation. They didn't grow to build this net worth. They don't know how to invest it at these yields, and so they're now struggling to survive on Social Security income. Many of our senior population are moving in with kids and friends and family because that Social Security check just is not enough to retire. I don't want you to find yourself in that situation. So click the link below, get on the phone with one of my business development consultants. Let's work this out together, and let's begin getting you on the right path to where you ultimately want to end up. I hope this has been incredibly helpful for you. I look forward to working with you. God bless you guys. Have a great rest of your day.